The on-chain native products, I really love just because of the innovation, the speed, the programmability, the composability, all great stuff. But I will say, even in my shop at KPMG, we wrestle with DeFi every day because it doesn't follow the same rules as everything else. It doesn't have any of the protections as everything else. And so the data extraction's harder. It's just hard to deal with, but we all need to get there. So that is something that we at KPMG, we work on a daily basis. But let's go back, Francis, you were talking about it from a macro level before, so let's stick on that for a second, because one of the things, when we start talking about risks of this space, I think one of the things that I find risky is investor perception, because unless you're in it all day, every day, but what you read online, and so what we hear is, especially if you're on Twitter, well, Bitcoin, that's digital gold. It's a safe haven asset kind of thing. It's a store of value. So you can totally see an investor becoming maybe somewhat complacent, a less risky asset when it's really more risky. But then likewise, when you go on chain, you want to do transactions, you need to move value around. Stablecoin is the way to do that. And people just think, well, stablecoin's a stablecoin. After Genius Act, obviously that's not true, but that's not what people think. And so, and they don't even think about stablecoin anymore, which is ironic to me. They actually just think of it as cash. So maybe you could just speak to like investor perception. Is it right? Is it wrong? Where are we trying to go with it? Does it help or hurt?
Taking it back to the beginning of Bitcoin and the beginning of digital assets, right? It was a rebellion against central banking. It was a rebellion against fiat. It was a rebellion against debt, right? And through these various frameworks and the clarifications and the political momentum that John mentioned yesterday, stablecoins are tokenized dollars and they are fiat. And when you look at gold and you look at the history of gold, you look at 1933, you look at 1971, the whole idea around a currency that's backed by gold is it has a limited supply. And that's why Nixon took us off the gold standard in 1971. And the whole thing mechanically behind fiat is that it has an unlimited supply. And then when you look at the mandates of central banks vis-a-vis inflation and growth, money supply juxtaposed to GDP, you're seeing these mechanics because basically we inflate our way out of things until we can't anymore. And when you then look at the correlations between gold and the S&P 500 and Bitcoin and the S&P 500 or the NDX, you really start to see a bit of a different conversation. If Bitcoin were going to replace gold, gold would not be making new all-time highs consistently. And we don't know if the top is in. We've got some lower highs. But for this particular season, as growth sort of reignites, and Nouriel went over that yesterday. So the thing about it is that when I approach clients, when I approach advisors, basically digital assets have become, through the Genius Act and the stablecoins, an extension of fiat. Bitcoin mechanically in and of itself has a limited supply. So that's never going to replace fiat because there's no way the Fed can enact its dual mandate through that vehicle. Then you've had this broaden out into these various derivatives and various regulatory scenarios that just basically reverts it back into fiat because you're not going to unmock, 100 years of central banking loss. So it's not the same as gold. It doesn't have a perfect correlation. They have different risks. Gold does not have a flash crash risk, which we just saw recently on October 10th, right? There's still some need for infrastructure. And then again, to circle back to some of the other points made on the panel, it is a generational conversation. My friend was here last night, wealthy guy, Emmy Award winning writer. I said, how much Bitcoin do you have? $8,000, right? It's just generationally, he's not there. The bulk of the assets are still the boomers. We're going to have this great transfer of wealth. And I think digital assets are, as they fall more in line with the existing infrastructure of the existing system, I think in the future, you will have a conversation. It'll become dollars at some point, but we're just not there yet.
Well, I want to add, we can debate all day on what is true money, right? I actually view stablecoin as a way to bring all the fiat money on chain. And once they're on chain, they have a lot more choices, right? So you just mentioned currently traditional finance is trying to put digital asset, which is a new thing, into the traditional wrapper, whether it's an ETF or a hedge fund. But there's a parallel line that's being developed, which is on chain. People heard about tokenization technology, no problem. You can bring this anything on chain, like my jacket, you can put it on chain too. So basically, I think stablecoin is really the first step to build a bridge between the vast amount of money you all have, which is off-chain to on-chain, and with development and maturation of the asset classes, I'm actually very optimistic on more choices for people to have once the money's moved on-chain.
That's exactly how we describe it too. It's like they're inverse direction bridges. Like where the ETFs are bringing a crypto asset to traditional investors, tokenization, stable coins are just going in the other direction, bringing traditional TradFi assets to crypto investors on chain.
Yeah, and I would say that the whole wave of real world asset tokenization for years at KPMG, because we do have a lot of boomers, but I've been telling them for years that whether you believe in crypto as a long-term thing or not, it may or may not be here in 10 years, you still got to get comfortable with this because everything you trade, whether it's stock, commodity, bond, they're all going to be traded on a blockchain. Right? It's faster, easier, and quicker. You may not even know it's on a blockchain, but it will be. So you just have to be comfortable with the concept and you got to get used to this. By the way, you mentioned a boomer with $8,000 in Bitcoin. That's a lot greater than zero. So kudos to him.
He's very progressive.